Yes, my dear friends. Continuation. We refer scope of supply, composite supply, and all. As I told you, CA Institute issued study guidelines for September 25 examination. Every attempt they used to provide. What is the syllabus not applicable for the given exam is clearly mentioned here. They said here topics of the syllabus. Case studies based on following: levy and collection of CGST and IGST, application of CGST IGST law, concept of supply, interstate supply, intrastate supply, supplies in territorial waters, charge of tax including reverse charge, exemptions from tax, place of supply, time of supply, value of supply, input tax credit, computation of GST. From these chapters, for case studies purpose, what is excluded? Rate of tax for supply of goods, rate of tax for supply of services, meaning we will provide a rate of taxes, normal rate of taxes. Do not want to worry at all. You get my point, sir? Here, provisions which are excluded from the corresponding topics of the syllabus. The topics what I referred not excluded. The topics in which rate of taxes for supply of goods, supply of services, don't worry at all. For normal rates. Exemptions for supply of goods from these chapters, from the time of supply, value of supply, place of supply, levy of tax, RCM. In all these cases, supply of goods category, exemptions, we are not going to test. That means we won't ask you supply of goods which is exempted, for which valuation, for which place of supply, for which the time of supply, for which input tax credit categories we are not going to test. Exempted supply of goods we are not going to test. List of exempted goods we won't ask in the examination. Value of supply in case of Kerala flood cases is applicable, that we won't ask in the examination. Manner of determination of input tax credit in respect of inputs, input services and capital goods, and reversal thereof in respect of real estate sector. Construction supply, we are not going to test in the examination. You get my point, sir? Which includes works contract service also. Real estate sector more suitable, construction supply of services, for which separate circulars are there, list of circulars are there, which we don't want to disturb our students. Therefore, we won't ask real estate sector any questions, we won't ask. Manner of reversal of credit of additional duty of customs in respect of door bars, meaning what? Additional custom nothing but what? IGST. As per section 3 subsection 7 of the Customs Tariff Act 1975, the Department of Customs, when you import the goods, in addition to the basic custom duty, additional custom duty will be levied, which is equal to IGST. That with regard to gold door bar goods, we won't ask. Does not mean that IGST as additional they're not going to ask. They will ask for other goods. For customs is considered, especially import of goods, reversal of credit concept with regard to customs, with regard to additional custom, we won't ask. Only if the subject is gold door bar is there. Only a pessimistic manner they given the exclusion. Earlier there are so much of list of exclusions. Now it is very limited. Exempted supply of goods they won't ask. The main one of the relaxation, and major relaxation is this real estate sector. From this we won't ask time of supply, we won't ask place of supply, we won't ask value of supply, we won't ask charge, forward charge, reverse charge, we won't ask. If the matter relating to real estate sector, where we have floor space index, long-term lease, thereafter the transfer of development rights, time of supply, place of supply, value of supply, we won't ask. It's a major relaxation. The remaining all in our syllabus. Further, they given one more very reasonable one. Transitional provision. What is it is? Section 140, 141 sections it is. Transitional provision means when the taxpayer under the old regime of GST law prior to 1/7/2017, who is regularly paying the tax under the service tax, was earlier paying the central excise duty, who is earlier paid state VAT CST, says the central sales tax, that taxpayers migrated into GST law, there's a transitional provision has been introduced. Meaning what you know, sir? I'm a central excise duty taxpayer. The central excise duty is a revenue for whom? A central government. When I convert into GST law taxpayer, migrate into GST law, my purchases on which I paid central excise duty, for me allowed as input tax credit under which head? CGST, IGST, SGST is as a CGST credit. I was earlier paying the VAT. I am registered under the VAT, state VAT law. I have certain purchases where I paid the VAT, which is my input tax credit under the VAT law. When I convert into GST law, that VAT become a credit for me. The VAT credit is a credit for me under GST law as a SGST credit. Like that service tax as a CGST credit. Those migrating assesses, when they migrate GST law, they taken their credit of the respective laws as credit under the GST law as CGST or SGST. That time certain rules and regulations has been formed with sections that is called as transitional provisions. That transitional provisions outdated one, today not in force, but the act contains the section. The section is outdated one. Now we can operate it. That's why they said it is excluded from the syllabus. Transitional provision excluded. Is clear, my dear friends? When the GST law was introduced, transition was a hot cake topic. And I got an opportunity with the almighty blessings to address CA students conference at Chennai, that particular nearby DMS office, very big auditorium is there, na? Which auditorium are there? There's very big auditorium, CA students All India conference taken place. There they give me opportunity to speak on this transitional provision. I'm talking about before Corona was. But anyhow, what is the exclusion should understand. My study also clearly by taking into account these topics by excluding only I refer from the exam point of view. So with that, this point that what is the exclusion, I sent you a group, and I also told you the workbook which I wanted to share with you. The workbook fully I shared with you people. Revised workbook, it is applicable for your September exam as well as John 26 examination. The workbook also shared in the group. You please make use of it. I can't work out all the problems. You please try to do it at the end. Doubts will come. Send the WhatsApp. My WhatsApp number is there with you people. In the group you send also. Or send to my personal mobile number also, which is there as a attached number in the group. I will clarify that. Now please come back. Presenting now composition scheme, which is a unique nature, section 10, subsection 1, section 10, subsection 2, capital A. Now listen to me. I will simplify my presenting this composition levy scheme in a simplified terminology. Once you understand, taxpayers under the composition scheme bifurcating into two groups. Group 1 contains trader, manufacturer, restaurant, service provider. In the second group, I am providing second group for service providers other than restaurant, like chartered accountant, cost accountant, company secretaries, chartered engineers, manpower supply services, renting of a motor vehicle services, education institution services. Like that, those services offered by service providers grouped into group 2. There are two group of taxpayers. Now, the first group, composition taxpayers, who are under the category of composition scheme, namely trader, manufacturer, restaurant. If they want to avail the benefit of composition scheme, composition scheme is benefit a question mark. Yes, is a benefit for new entrepreneurs. Just now you qualified as a cost accountant or a chartered accountant or a company secretary. You want to open an office as a chartered accountant. Right from first day itself, your billing is 20 lakh rupees. Then what happened? You will liable for registration. When you registered, you are liable to pay GST 18%. Therefore, the law says for you up to 50 lakhs of your turnover in a financial year, if not exceeded, you are eligible for composition scheme, where you are liable to pay CGST 3%, SGST 3%. If other group, trader, manufacturer, restaurant, they are, for them, the aggregate turnover in the preceding financial year not exceeded 1 crore 50 lakhs, namely 150 lakhs. In the current year, you are eligible for composition scheme, where a trader liable to pay CGST 0.5%, SGST 0.5%, manufacturer 0.5%, CGST 0.5% GST. For a restaurant fellow, only liable to pay 2.5% CGST, 2.5% GST, which is a far lesser rate compared to normal rates. Is a benefit, but with one major drawback. Composition taxpayer not eligible to claim input tax credit. So, it is a tax planning for you. You have to project for your client. If you go with the composition tax, how much tax liability? If you go with the normal scheme, what is the net outflow? Which is economical, you select. You get my point, sir? So, is a tax planning aspect, but you have certain conditions to satisfy when you go for composition scheme. One of the criteria I said for a trader, manufacturer, restaurant, your turnover should not exceed 1 crore 50 lakhs aggregate basis, all India basis turnover. But my dear friends, if you are locating in few states called Arunachal Pradesh, Manipur, Mizoram, Meghalaya, Nagaland, Sikkim, Tripura and Uttarakhand, your aggregate turnover, being a trader, being a manufacturer, being a restaurant, should not exceed all India basis 75 lakhs. This aggregate turnover includes taxable as well as exempted turnover, but does not include interest earned on deposit, loans and advances. Got my points? Now, assume a scenario. I am a trader. My aggregate turnover in Tamil Nadu not exceeded 1.5 crores in the previous year. In the current year, can I opt for composition scheme? Yes. Sir, previous year zero turnover, sir. Why? I have not existed, sir. Current year only I existed, sir. In the year 25, 26 only. Today I am incorporated business, sir. Today what? It is 4th of August 2025. Today I made an application for the want of registration. While making the application for the registration, can I avail the composition scheme? Yes. Previous year 24-25, which is 0, which is not exceeded 1.5 lakhs, 1.5 crores. Therefore, eligible for composition scheme current year. Is clear? Sir, you said 150 lakhs all India aggregate turnover for trader, manufacturer, restaurant. For few states like this, 75 lakhs. If I have my place of business in the state of Sikkim, aggregate turnover should not exceed all over India basis how much? 75 lakhs. Very good. If exceeds 75 lakhs, I am disqualified for conversion. Correct? Sir, I am instead of having Sikkim, I have the place of business in Tamil Nadu, sir. As a trader, my aggregate should not exceed how much? 1 crore 50 lakhs. 1.5 crore. Very good. If I have the place of business in two states, one in Tamil Nadu as well as in Sikkim, then each state is a principal place of business, my dear. Each state where we have the place of business is the principal place of business. Each state is the principal place of business. In that case, aggregate turnover in Tamil Nadu how much? Sir, aggregate turnover in Tamil Nadu 50 lakh rupees. Okay. Aggregate turnover in Sikkim how much for your same company, same PAN number? Sir, which is 30 lakhs, sir. Oh, 30 lakhs in Sikkim, 50 lakhs in Tamil Nadu. Together aggregate how much? 80 lakhs. One PAN holder only you are. Yes, sir. Then exceeded 75 lakhs. As a result, you disqualify for composition scheme in the state of Sikkim. Then you also disqualify in the state of Tamil Nadu for composition scheme. Reason, you cannot opt composition scheme for one state, normal scheme for other state having the same PAN number. Either you may be composition taxpayer all over India if eligible. Otherwise, normal taxpayer. This is a point one can expect in the examination. Now please come back. Sir, everything is good, sir. So far, so good, sir. The law here says, furthermore, conditions you have to satisfy not only the criteria of the aggregate turnover in the previous year, but also you should not be supply non-taxable goods. You should not supply non-taxable services. Sir, we know non-taxable goods. What is that? Alcohol, liquor meant for human consumption, which is kept outside the scope of the GST law. There won't be any GST, sir, because Article 350, Article 366, Sub-Article 12, capital A specifically mentioned levy of GST on all supply of goods except liquor meant for human consumption, which is non-taxable goods. Then what is non-taxable services? Simple, sir. Same liquor serving by restaurant fellow. Supply of service, na? Supply of what is supply service? Liquor. So non-taxable service. Therefore, not eligible for composition scheme. So my point here is, a person who dealt with non-taxable supply of goods, non-taxable supply of services, irrespective of the turnover, disqualified for composition scheme. Is clear? Further, a person who is supplying interstate outward taxable supply of goods or services, disqualified. Interstate outward supply of goods or services, then that person disqualified from composition scheme. I have a doubt. I am Mr. Rajaram from Chennai, dealing with taxable goods, laptops. I purchased from M of Maharashtra, registered person, 10 laptops worth 10 lakh rupees. Rajaram in the state of Tamil Nadu, eligible for composition scheme or not? Yes or no? Yes, eligible, because it is inward supply for which no restriction. Restriction is given only for outward supply of interstate supply. Is clear? Then one more important condition, I should not supply my goods or services or both through e-commerce operator. If I supply through e-commerce operator, disqualify from composition scheme. If that is the case, what benefit you are granting? Industry is getting hurt. What for the composition scheme brought into force? Because helping to MSME sector, micro, small, medium enterprise, correct? When you are talking the liability to pay the GST normal rate, if I supply the goods through e-commerce operator, nowadays the supplying the goods 80% of market routing through e-commerce operator. Am I right? Amazon, Flipkart, that and this. So in that case, supplying through e-commerce operator is inevitable, which cannot avoidable. I may not be get the business. You get the point. So supplying the goods through e-commerce operator is inevitable. One can't avoid it. Then you disqualify me from composition scheme. Unfair. You are telling helping hand. Other side you are plugging the help. Then the government realizes, yes, you are right, brother. In that case, for you, if you are a supplier of the goods, we are making the amendment from 1st October 2023 onwards. If you supply the goods through e-commerce operator, ensuring that intrastate supply of goods, then we permit you to supply through e-commerce operator and we permit you to have composition scheme. But this provision not applicable to supply of services. If the supplier supply the service through e-commerce operator, disqualify from composition scheme, even though they might be supplied intrastate supplies. Got the clarity? Further, so if a person being a taxable person wanted to pay composition scheme, what conditions he has to satisfy? Group 1, trader, manufacturer, restaurant, whose aggregate turnover in the previous year should not exceed 1 crore 50 lakhs. For few states should not exceed 75 lakhs. For a service provider, second group, other than restaurant, should want to claim composition scheme, all India basis, their turnover should not exceed 50 lakhs. Here there won't be any distinction. Even you are in Sikkim or in Tamil Nadu, you may be in what we can call Tripura or in Maharashtra. The turnover limit all over India is how much? 50 lakhs should not exceed. Got the clarity, my dear? Now, here aggregate turnover in the previous year, which includes taxable as well as exempted. When you talk about eligibility, you have referred to the previous year. When you are liable to pay the GST in the current year, meaning thereby a composition taxpayer paying the tax from their pocket without collecting it from buyer pocket. Meaning, being a composition taxpayer, in the invoice should be clearly mentioned a composition taxpayer not eligible to collect tax. That word should be there in the invoice. And the tax what going to pay department from the pocket of the supplier, not by collecting from the buyer. If so, the composition taxpayer mandatorily should issue bill of supply where GST not apply. Tax invoice should not be issued. Tax should not be shown separately in the bill. That is called bill of supply. Get my point, sir? And if you are eligible for all these particular, satisfy the conditions and eligible for this, then you are liable to pay the tax in the following manner. As a manufacturer, you are allowed to pay the tax 0.5% CGST, 0.5% GST on the aggregate turnover. The turnover includes taxable as well as exempted. When you being a trader, eligible to pay the GST under composition scheme from your pocket, 0.5% CGST on aggregate taxable turnover only. It is not inclusive of exempted turnover. CGST 0.5% on taxable turnover, SGST 0.5% on the taxable turnover by the trader liable to pay the tax from his pocket. Restaurant 2.5% CGST, 2.5% SGST on aggregate turnover, which includes taxable as well as exempted turnover. Coming to a service provider, other than restaurant service provider, liable to pay the GST under composition scheme from his own pocket, 3% CGST, 3% SGST on taxable as well as exempted turnover. But in all cases, wherever the turnover includes exempted turnover, that exempted turnover does not include the interest earned on deposit loans and advances. Meaning thereby, interest earned on deposit loans and advances neither includable in the eligibility criteria for deciding turnover in the previous year nor includable in the current year turnover to pay the GST thereon. Of course, a composition taxpayer going to pay the tax on quarterly basis. By 18th of the following month from the end of the 11th quarter by filing the form GST CMP 08 quarterly. For opting the composition scheme, there must be intimation prior to the commencement of the financial year in the form GST CMP 02. Suppose in a given financial year, your aggregate turnover exceeded the threshold limit prescribed for composition scheme. For example, I am a trader in the Tamil Nadu. My turnover today crossed 150 lakhs. With immediate effect, hey Mr. Composition aspire, with immediate effect, you should switch over to normal scheme by informing to department withdrawal of the composition scheme by way of form GST CMP 04 within 7 days from the event occurred. Within 7 days from the event occurred. Got the clarity? Now, sir, I'm a casual taxable person. I'm a non-resident taxable person. Can I opt for composition scheme? Sorry, for a casual taxable person, for a non-resident taxable person, composition scheme is disqualified. Irrespective of the turnover, they are not eligible for composition scheme. But one important phenomena here is, in the exam point of view, examiner very clearly said, we will provide in the examination normal rate of GST for normal scheme. We never going to provide composition tax rates in the examination. The student should recollect. Trader 0.5%, restaurant 2.5%, service provider 3%. CGST 3% GST, or a manufacturer 0.5%. It should be recorded by the student in the exam hall. We won't provide the rate of GST under composition scheme. It's clear. And the composition taxpayer should not be eligible for dash, not eligible for input tax credit. Therefore, the goods purchased, the service received by payment of the GST normal rate form part of the cost of purchases. Get my points? And here, one important point is there. Certain goods manufacturers not eligible for composition scheme, like manufacture of ice cream, pan masala, manufacture of tobacco substitute like cigarette BD, manufacture of air water, the fly ash bricks or the bricks of fossil meal, building bricks, roofing tiles. If these are the goods you are a manufacturer, irrespective of your turnover, you disqualify from composition scheme. However, this is not applied to a trader. I am a selling of Arun ice creams. I am not a Arun manufacturing. I am a Amul ice cream seller. I am a trader. I am a dealer. For me, composition scheme is eligible. This is not eligible for Arun company manufacturing ice cream. Amul company which is manufacturing ice cream, for them composition not approved. So the list here what I referred, manufacturers of these goods disqualify from claiming composition scheme. They are not eligible to claim. They can't able to eligible for composition scheme. Is clear as that? Now, having this, one important criteria I am bringing notice. Sir, you are a trader. What is the rate of GST you will be able to pay under composition scheme? 0.5% GST, 0.5% HGST. If you are a manufacturer, 0.5% CGST, 0.5% HGST. Of course, manufacturer will pay the GST on total turnover, and the trader is going to pay the tax on taxable turnover. Is the only difference between these two. Now, in that case, you being a manufacturer or a trader should not provide the services other than restaurant services beyond a particular limit. That limit is prescribed here. 10% of the aggregate turnover of the previous year or rupees 5 lakhs, whichever is higher, up to that much value of services in the current year you are allowed to provide. If you in the previous year itself you exceeded this limit, then you are disqualified in the current year to go for composition scheme. You get my point? Sir, in the previous year, this threshold limit not exceeded, sir. In the current year, I am planning, I am proposing, I am willing to opt composition scheme. In that case, the maximum amount of service has been prescribed in the previous year, 10% is again more or rupees 5 which is higher. That much only you are allowed to pay in the current year. Get my point, sir? Whenever you talk about 10% of the aggregate turnover of the previous year, that aggregate turnover should include taxable as well as exempted supply. But whenever you say exempt supply, that does not include interest earned on deposit loans and advances. Having this, can be able to answer a practical problem which was there in the institute desk in the name of questions for practice. You have heard of that? Questions for practice. The CA Institute uploaded chapter wise for CA final paper number 5 indirect tax laws in the website during the corona period. After the corona, that particular questions for practice like workbook deleted from the website, not there thereafter. Why? What happened means this questions for practice further need to update because lot of amendments are there now. Lot of amendments. Every 6 months amendments which is not updated. Therefore, those answers are static nature become invalid. That's why that is a difficult task. Might be I think so. That is the reason questions for practice, separate volume, soft copy, deleted. Now it is not there in the website. Your faculty that time fully copied, downloaded and amended with the latest amendments wherever applicable. Accordingly, suitably change the answers. I brought the workbook which is there with you. From that workbook, I am working out a problem now which was there in the institute desk in the name of questions for practice. One can expect in the coming exam of CA final. I am presenting that problem now here from the workbook. Now workbook in your hands. It is I sent to you your group. Please make use of it as a download, take printout, keep soft copy as soft copy is your will and wish. It is your property I sent. I prepared for you people only. Na? If I hide it, what is going to happen? Nothing is going to happen. If I give to you, na, it may be going to blow. Students will get benefit. So with that, I have sent to you and problem I'm working to work out here with regard to this. Yes. From our material, workbook, reading as follows. Question number 4. Tasty Bites Eatery operates as a restaurant service provider in Karnataka. In the preceding financial year, its turnover from restaurant service was 150 lakh. In the current financial year, its expected turnover includes 130 lakhs from restaurant service, 12 lakh from farm labor in the same state, 25 lakhs bank interest earned on fixed deposit. Advice: Tasty Bites Eatery whether it is eligible for the composition scheme in the current financial year based on the given details. Additionally, compute estimated tax liability for the current financial year under the composition scheme if applicable. Now they're asking to find out the GST liability also under compulsion scheme. Now here what happened? What is the turnover in the previous year? Exactly 150 lakhs. Exactly 150 lakhs. Eligible? Eligible. Reason, it should not exceed 150 lakhs. Means less than or equal to 150 lakhs. Is the exam problem. Exactly 150 lakhs na examination tension in the exam hall. Student will be cool mind will apply, or he will get tense and leave it. You always cool. I'm telling you, cool. How you cool? No, even that question after reading, you will not understand anything. Be cool. Don't get tense. What is going to happen if you tense? Everything will go away. Health will affect. Be cool, calm. You should be cool in such a manner that even in the practice also, one of your premier client who is paying huge amount of fees every month to you, calling over, sir, income tax people came to my office, writing taking place, sir, you come. You never go there for the God's sake by the time. You should not go. Be cool. Don't worry. Let them do their job. We'll assess it and I'll do for you. Don't worry. I'm with you. What happened if you go there now? What happened? The department officer in force. They will simply say, hey, Mr. CA, are you going to cooperate? Or should we call the police? Your credibility will shake there. You get my point? Relax. If you go and stand means, okay, either put even either come. Enough. Every information is available with him. So you should not go there for the God's sake unless they demand you to come. Who? Department people. Get my point, sir? Let them wash it out, entire thing from the client place. More damage, more fees to you only. Yes or no? More damage. Fees increase. Furthermore. So, like that, you be cool. Even practice damage also. Practice at the cost of the client. Whatever you do, ultimate sufferer gainer is by whom? Client. You practice easily, but in the exam point of view, you cannot take the risk. Exam point of view, at your cost, at your future, you are preparing. Therefore, be careful in the exam point of view. So, be cool. The carefulness will come when you have coolness. Cool. Nothing going to happen. Two things will happen. Either pass, if not, come again. It is that. So, we won't mind. We are deserved to qualify. That's all. Get my point, sir? But to qualify, any one paper of any group must be 60 plus. That is the benchmark. As per my knowledge, with my experience of my biology students who qualifies, one group writing na, one paper is a favorite paper. Should get 60 plus. Thereby, you passing individually, aggregate problem won't come. Passing individually, but aggregate problem, no use. You get my point, sir? So, like that, you take the favorite paper, indirect tax laws. Highest scoring should be. Tomorrow, my practice it is. See, the subject of indirect taxes is such manner you study well, wrote well, pass well, then you practice well in the same field. Unlike of other subjects, I am not criticizing other subjects. Other subjects also be good subjects. Excellent practice scope is there. But indirect taxes not less than anything. Indirect tax not a theory paper. Indirect tax scoring paper. Only you have to concentrate. Lengthy provisions. Very simple answers. Look on the screen. Previous year turnover exactly 150 lakhs in the state of Karnataka. No problem. Eligible. Now, if eligible means in the current year, he is trying to provide service also. Get my point? His estimation, it is expected turnover, not turnover. Forecasting. Can he do so like this? Means, what is the maximum permissible limit of services offered by a trader, manufacturer, other restaurant services, or restaurant service provider providing service other than restaurant? 10% of turnover of the previous year or 5 lakhs, whichever is higher. Here 10% of 150 lakhs is equal to 15 lakhs or rupees 5 lakhs. whichever is higher. Which is higher? 15 lakhs. Up to that he can provide in the current year estimation. But he is willing to provide how much? 12 lakhs. When you talk about interest on fixed deposit, this should be excluded, should not be considered. Just keep outside. So how much is providing? 12 lakhs. How much allowed to permit? 15 lakhs. That condition satisfied. Then in the current year he can opt for compulsion scheme? Yes. Aggregate turnover for a restaurant fellow, taxable as well as exempted. How much here? 142 lakhs. On 142 lakhs, CGST, how much? 2.5%. That is not given the problem. Not given. You have to recollect it. Thereafter, HGST 2.5% on what? 142 lakhs. How much comes? Quickly, fast. 142 into 2.5% is equal to how much? 3.55 lakhs. 3 lakhs 55,000. 3 lakh 55,000. That's it. Pay from the pocket. And that is what Baba, I know this. You people will get that truth. That's why I am presenting. For taxation purpose, taxable aggregate turnover includes taxable as well as exempted. Such exempted does not include interest on deposit loans advances. Other than that is includable. Aggregate turnover enna in the parma Raja in the parma. I will tell you. I will show. I know that your doubt well valid. Generally will come. Actually, why should I pay the GST under exempt supply? Correct, Amma? That is in a normal scheme. In the normal scheme, nil rate of GST apply for exempt supply. But in the composition scheme, aggregate turnover is a turnover tax. Composition scheme is none other than what? A turnover tax. You have to pay the tax on aggregate turnover, taxable as well as exempted. In our material I given no for a restaurant 2.5% CGST, 2.5% HGST on taxable as well as exempted. This exempted does not include interest on deposit loans advances from your pocket. You should not charge in the invoice. Therefore, you should issue dash bill of supply where the GST not shown separately. Now you got clarity, my dear sir. Now ask about further.
Two things also. One is restaurant service, another one is any other service. That is supply of foreign labor. So for restaurants, what we calculate is 2.5% on aggregate turnover is one part. But for other service, again 0.5% you have to calculate.
On what, Raja?
On 12 lakhs, you have to calculate point.
Why?
Any other service is 0.5%.
For whom it is 0.5%, Raja? For a manufacturer. Is a manufacturer, huh?
No, but there are two types of services provided. One is restaurant service. They have given exclusive for restaurant service 2.5% of total turnover. That is one part. But he is rendering another service also. For the tax.
Under composition scheme, if there is a tax now for a service provider, other 3% CGST, 3% GST. That won't apply here because he is a restaurant nature as a whole restaurant. If you say he is a other service provider, then limit is 50 lakhs only. Limit how much? 50 lakhs. How much he got? 150 lakhs. Disqualified first part. Is clear? Any difficulty? Will come. One more problem will do. See, problems only makes perfect. Always I believe, Raja. Theory, I explained. All of you listen. Very happy. If I just go to the next chapter, what happened, you know? You get caught in the exam hall. Theory, problem. Gap so much gap. Should bridge it, fill up. Only with help of problems. Problems gives bright light on darkness. Dry area, dark area. Bright light will come only when problems comes into picture. Then only you can speak the provision, then only you can get a doubt to get clarified. Theory, there won't be any doubt at all. Is it clearer now? So my point to say that A trader manufacturer allowed to provide services other than restaurant services with a limit 10% of the agreed amount of the previous year or 5 lakhs, whichever is higher. Restaurant wala also be allowed to provide services other than the restaurant with this limit. I want to bring that concept. That's why this problem I lifted from the practice for CA final practice manual. This problem is there in the institute desk. Will come in the examination. So accordingly, we have been solved the answers. He has to pay the GST like this. It's clear. Now, I will tell you one point here. One more problem is there for your kind concern. One can expect in the examination. Now, I will take into account. Now, listen. You are Mr. CA Ram, who is a practicing CA. He is a chartered accountant. Then his turnover in the year 25-26, let us say 20 lakh. 20 lakh. First quarter is clear. Then 30 lakh in the second quarter. Then 40 lakh in the third quarter and nil in the fourth quarter. Nil in the fourth quarter. Is clear. This RAM incorporated, assume on 1st April 2025. His financial year 2026 is current financial year. In that year he incorporated. Now you tell me, my dear friends, in the given case, first quarter he got how much? 20 lakhs. Previous year 24-25 turnover how much? 0. Now in the current year, when he incorporated 1st April, is he liable for registration? No. For registration in the state of, let us say, Tamil Nadu, for example, for a service provider, threshold limit how much? 20 lakhs. Is clear? So you are not liable for registration up to 20 lakhs. You not also got registered, not got registered. You know that you are CA. So in the first quarter, you are unregistered. You are unregistered person. Very good. Unregistered person is clear. Now, by the end of the first quarter, you reach the 20 lakhs. In a financial year, exceeds 20 lakhs, no, liable for registration. That time, your name is called taxable person. The taxable person is the person liable for payment of tax. Liable for payment of tax. Now, from 1st April 2025, CROM is liable for registration. Correct, Amma? 1st April, sorry. 1st July. CROM from 1st July 2025 is liable for registration. Now, from 1st April 2025 to till the date of liable for registration, is a turnover, how much is there? 20 lakhs. Is clear? Now, in 1st April, as a first in the month of second quarter, first week, in the month of July, he applied for registration, Form GST RG1, and obtained the registration. While obtaining registration, he ticked the option called as composition tax. Then he is a composition taxpayer. Is clear? Assume from 1st of July, he is a composition taxpayer. Now liable to pay GST or not? Monthly or quarterly, half yearly or yearly? Quarterly. So turnover as on the end of the second quarter, how much? 50 lakhs. Now entire 50 lakhs is a taxable to pay 3% CGST, 3% GST. This has been clearly clarified. From the 1st of April till the date liable for registration, such a turnover, if anything is there, should exclude from the turnover for taxation purpose. As a result, now my turnover how much? Till 30th September 2025, how much? 50 lakhs, which is 20 lakhs plus 30 lakhs. Then reduce till liable for registration, how much? 20 lakhs. The balance how much? 30 lakhs is a turnover subject to composition scheme, where CGST 3%, HGST 3%. How much comes here? 30 lakhs means 3%, 90,000. Correct? Correct, Raja? 90,000 is liability to pay. Now, in the current year itself, we cross the limit of 50 lakhs. From third quarter onwards, he should be switched over to normal scheme. By intimating department in the form GST CMP 04, withdrawal of composition scheme within 7 days from the event occurred. In the given example, within 7 days means within 7 days of the October. 7th October should be intimate. Very good. Normal scheme. How much turnover? 40 lakhs. This is liable for GST or not? Under the regular scheme. CGST 9%, HGST 9%. On 40 lakhs, how much comes? 36, 3 lakh, 3 lakh, 60,000. 3 lakh, 60,000. Got the clarity? Now what happened? This fellow up to the second quarter end, composition scheme. From third quarter onwards, a regular scheme. Now with that 25-26 financial year over. In the next year, 26-27, can you opt for composition scheme? When you look the previous year turnover, which includes taxable turnover as well as exempted turnover, but does not include interest and deposit advances. While Rafi the turnover what is excluded for taxation purpose should include. From 1st of April till date liable for registration, how much turnover? 20. From the 1st of April till the date liable for registration, 20 lakhs should include in the aggregate turnover. So 20 lakhs plus 30 lakhs plus 40 lakhs. Total is 9 lakhs. Limit is only 50 lakhs. So cross the limit, not eligible for composition next year. Is clear? But this 20 lakhs of deduction from for taxation purpose, it won't come every year. Only in the year in which you incorporate, only it is applicable for you. Get my points? Any difficulty to note this? As simple as this. Composition scheme major content has been touched and completed. And you get my point, sir?
Say daily transaction we can
Input tax credit. Ah. Input tax credit comes into picture. Again, is advanced concept. Is a premature to refer, but you are mature enough to understand this point. It is come under this section 18 of the CGST, where section 18, subsection 1, class C, which talks about the input tax credit for the person ceases to become a compounding taxpayer, ceases to become a compounding taxpayer. As on the date of ceases to become a compounding taxpayer means what? As on 1st of July, 1st of October, first as on 1st of October 2025, you ceases to become a compounding taxpayer. So as on 30th September 2025, if we have inputs, huh? Input goods, input goods, I'm talking about input goods and input services. I'm talking about capital goods. If you have with you, on which tax invoice is there with you, you are eligible to claim ITC, provided the tax invoice on such input and capital goods should not be older than 1 year from the date of invoice till the date to avail the ITC. More than 1 year it could have it. It should be within the 1 year limit to avail the ITC, which is special circumstances I will take up under the input tax credit chapter. Eligible to avail ITC with some conditions, but not on input services. Yes, input goods allowed, capital goods allowed. What is input goods? Refer section 2, subsection 50, section 2, subsection 59. Input goods. Capital goods, section 2, subsection 19. What is input goods? Other than the capital goods is input goods. Then what is capital goods? The value of which capitalized in the books of accounts by the person who availing the input tax credit and using that asset in the course of furtherance of business. Whatever asset you capitalize in the books of accounts is capital goods under GST law. Whatever capital goods, not a input goods. Get my points. What is not capital goods? Everything called as a input goods. With this and this topic, no, this point, what I refer here, this one on the screen just now, not record. I'm sending directly to your group. Make use of it. If you go to your room or home, neatly sit and what sir said today, just go through it from the material what I given to you, which is available, everything point by point is available. So you can record. Right now I'm sending this page to your the certain things I will supply. The labor I will do. You do it, your job understanding the concept. Right now I'm sending to you. It is in the group now. If you have mobile, you can check whatever I mentioned here. Online students are following me, ma? Are you comfortable? Any doubt? Online students. That's what biggest drawback of online student, even though they're good enough, for me, difficult to look into that particular area. You are self-motivate yourself and study, online students. Otherwise, please come and sit in the class. I will make ensure that you won't sleep in the class at all. Yes, 100% assured. Came to the group. Is clear, sir? Now you relax. Relax just 10 minutes. Now I'm going to go with what? Reverse charge mechanism. Any doubt? Take the thing and ask me. Tell me, sir.
In 10 subsection 1, there's a provision as well. Any other service for that, the limit is 10% of turnover or 5 lakhs, whichever is higher.
The 10 percentage also we have to see the pan wise or state wise.
Good question. Always you have to go with the PAN. 150 lakhs for aggregate turnover, one PAN holder. 10% is also one PAN holder. All India based sort of, not state wise. Payment of the GST state wise. Registration of the GST state wise. But aggregate turnover when you refer PAN based all over India base. Is clear? 10% are aggregate turnover of the previous year. And at the same time, Amma, as I told you, for one state you cannot be composition taxpayer. For other state, normal taxpayer not possible in one financial year, one PAN holder. Is clear? Is very very clear. And I said intimation to department when you go for composition scheme, existing taxpayer should be prior to the commencement of the succeeding financial year. It is sufficient to intimate in one state to department. It is deemed to be intimated for other states. Is clear? Any further more doubt? So now we take just a break of 10 minutes, relax, and we'll take up dash a chapter called reverse charge mechanism. I'm going to take up.
All these days are important. 50 days, 7 days.
Hold the mic, please. Tell me, Amma.
Sir, for exam purpose, this dates are important, sir.
Which date, Raja?
This 30 days, 7 days,
Absolutely important.
GST forms and all number.
Forms final level. He said, institute said, not mine. What is excluded from the exam point of view? Institute said. Only this has been excluded. This point, the 6 points are excluded. Remaining are inclusive only, na? This how important, no, in case studies, in case multiple choice questions, a composition taxpayer exceed threshold limit for the 150 lakhs on so and so date, within which period of time, which form should be submitted in the department through GST portal. You would say form GST CMP4 within 7 days. I have not told you furthermore, one more form is there, ITC. To claim ITC, Raja, ITC 03, yeah. Is it so? Intimation department, there is a problem. ITC 01. Look here. You read, Raja. This point alone you read, please. The example 4 read on the screen, please. You read, bro. As a friendly, we have, see, I am never going to scold to my persons. You are tomorrow going to become qualified and sit next to me as a member of the institute. Hi sir, hello sir, how are you sir? As a friend of the profession. You get my point.
Yes.
So please read, Raja.
Turnover of Mr. X in the preceding financial year is 49 lakhs. Mr. X has opted for composition scheme. During the year on 18th February 20, turnover of Mr. X exceeds 1.5 crores. What compliances are required to carry by Mr. X?
So in the current financial year, exceeds 1.5 crore, then composition scheme you are not eligible with immediate effect.
Immediate effect.
Ceases to become a composition taxpayer. When he crossed the limit, Raja? On 18th
18th
February.
February.
Correct?
Yes, sir.
Then within 7 days means
7 days.
19th February, 19, 20, 21, 22, 23, 24, 25. By 24, on 25, you have to submit GST CMP 04. And you also submit within 30 days from the date of event occurred, what ITC 01 to avail the ITC. The stock available as on 18th February on which invoices not older than 1 year from date of invoice till that availing ITC, eligible ITC are input in capital goods. For availing ITC, what are the stock available? You have to disclose department by filing the form GST ITC 01. Get my point? The time limit is 30 days. Is clear? That the answer is given here, clearly given answer. The 30th March is the 30th day.
Other
Okay, but this gentleman asked one doubt, that gentleman asked another doubt. This gentleman doubt, correct. Tell me. Hold the mic now, brother. Mic enga poiche? Mic, just pass it on the mic. Yeah, have it. Yes, Baba.
in the book, it's given that turnover in a state 10% is what you
Correct. That's what I also given here. Here I also given in my book. My book referring another book. My book. Okay, very good. So very good. My book only I'm telling you here. It is my book means what? I copied from the institute book. But anyhow, but we are best copying from others. This one, 10% of the turnover in a state or the previous year 5 lakhs, whichever is higher. Treating this as a one place, one particular state only the business. If you have more than one state, aggregate turnover 10% or 5 lakh rupees only remains. Whichever is higher, have to consider Amma. Okay, na? Any further more doubt, Raja? Now relax for just 10 minutes, fresh up and come back. We'll go with the mind-blowing point chapter called what? Reverse charge mechanism, and time permits I will be referring the time of supply. Is clear? Time of supply, like that we can just refer at final level. Are you come across by passing intermediate level, na? Time of supply. So see you after 10 minutes from now. Yes, sir. We'll continue now. Now bring into notice a new chapter, reverse charge mechanism, where the recipient liable to pay GST, supplier nowhere liable to pay GST. Now is a preamble manner bringing into notice two important case laws. One is called Rashtriya Ispat Nigam Limited versus Diwan Chand Ram Saran case of the Supreme Court of India, landmark judgment, followed by Delhi Transport Corporation, Delhi High Court judgment. In these two judgments are says commonly a taxpayer on whom GST has been levied, from them only GST should be collected, meaning levy of tax, collection of tax. If it is on supplier, forward charge mechanism. If it is on recipient, reverse charge mechanism. Now, when the contract was executed between the supplier and recipient, supplier is A, recipient is B. When the contract executed, they have been executed the contract, that time that supply forward charge. As a result, supplier agreed to pay tax. While providing the supply, there is an amendment in the law. The given supply RCM applied with retrospective effect. Resultantly, Mr. B, being a recipient, paid the tax under RCM. Whatever the tax he paid, deducted from the value payable to supplier and the net amount paid to supplier. Supplier argues, here Mr. B, as per the agreement, who has to pay the GST? Supplier. I will pay the GST. Why you are deducting the GST from my payment? Therefore, you please pay full amount of GST to me. B replied, sorry, Mr. A, law costed responsibility on my head to pay the GST. Therefore, I paid the GST. The burden of GST I shifted to you only by deducting your bill. By deducting from your bill. A is not accepted. A and B went to up to Supreme Court of India the case. In the case of Rashtriya Ispat Nigam Limited versus Diwan Chand Ram Saran case. Supreme Court of India said, one cannot shift responsibility to pay the GST. One can shift burden of tax to others. Shifting the burden of tax different from shifting responsibility to pay the tax. After that judgment, what happened? B, his activity justified. Get my point, sir? He paid the amount of GST department. The same deducted from the bill raised by the supplier. The burden has been shifted to supplier. In Delhi Transport Corporation, what happened? Delhi Transport Corporation said, Mr. Corporate companies, you want to promote your product services by hosting the hoardings on my bus shelters. I'll permit with one condition. The GST thereon you have to pay. I will collect the payment from you. On such payment, GST you have to pay. Then only I will agree. Corporate houses agreed, we will pay GST, sir. Please permit to promote our product and services on your bus shelters. After that, department send a notice to the Delhi Transport Corporation. You are a supplier, is a forward charge, you are liable to pay GST. Delhi Transport Corporation replied by saying that, department, for you, GST came or not? Either supplier paid or recipient paid, amount paid or not? For you, GST paid. Therefore, no revenue loss. Go away. Department said, no, you are a supplier, you only liable to pay GST. This matter went to Delhi High Court. Delhi High Court said, if a supply is a forward charge, for which GST remitted to department by recipient, not a payment of tax. The liability of the supplier remains the liability. Meaning what? Responsibility to pay the GST cannot be shifted. Get my point? Mr. A, Mr. Delhi Transport Corporation cannot say, hey department, go and collect the GST from the recipient if it's a forward charge. Recipient cannot say to department, hey department, go and collect the tax from the supplier if it's RCM. You get my point, sir? On whom levy is costed, from whom only the GST will be collecting. If somebody remitted the GST department, the liability remains liability of that person. Is clear up, my dear friends? This is the concept. Having this concept, in what are the cases the liability to pay the GST is dumped on the recipient, not on the head of supplier, on the head of the recipient. In the following identified goods, what are they? Here, cashew nuts, not shelled, not peeled. Supplier is the agriculturalist, recipient is a registered person, recipient only liable to pay GST. BD leaves, tendu, supplier is agriculturalist, recipient is a registered person, recipient liable to pay GST. The tobacco leaves, supplier is the agriculturalist, recipient is a registered person, recipient only liable to pay GST. There are certain products like peppermint, mentha, or citrus nature, Northanga, like we used to call. Such a type of product, oil, peppermint oil, bergamot oil, horse mint oil, which is supplied by any person to a registered person, the recipient, registered person liable to pay GST. Identified, notified person only. Otherwise, all other cases, forward charge, FCM apply. Supply of the lottery ticket is called supply of goods. Specified action book claim summa. Supplier is a state government or local authority. Recipient is that commission agent. Who liable to pay GST? Commission agent, recipient liable to pay GST. In the case of silk and manufacturers supply the goods to a registered person liable to pay GST. Vehicles, used goods of the government or local authority supplied by the government or local authority to a registered person only, recipient, not any other person allowed. So in that case, recipient liable to pay GST. What type of goods? Say, for example, GST department confiscated certain goods where the taxpayer absconded. The goods has been confiscated. The confiscation means the ownership of the goods shifted to department. Department, what they will do with that goods? Say, they sell through auction. In that case, registered person purchase the goods. Who liable to pay GST? GST department or registered person? Registered person being a buyer liable to pay GST. Get my points? However, here one exception is there. In case of Indian Railways supply the goods or they supply the services. Only FCM, though it may be government. If Indian Railways selling their own furniture, old furniture, used furniture to registered person, who liable to pay GST? Indian Railways. The same provision already there for our Indian Postal Department. Supply of goods or services by Indian Postal Department or Indian Railways. I am talking about Indian Railways. I am not talking about Metro. Metro Rail different from Indian Railways. Indian Railways owned by the central government of India. Metro owned by state government. Therefore, lot of ocean of difference. Indian Railways supply the goods, used goods, RCM not applicable. If and if FCM only. Further, raw cotton, agriculturalist supplied, recipient registered person, recipient liable to pay GST. Priority sector lending certificate. What do you mean this? The name itself talks about priority of what sector lending certificate. For example, NABARD wanted to help to agriculture sector. Therefore, their entire capital maximum amount invested by lending the loans, providing the loans to farmers. Still they want to fund. They won't have fund. Therefore, they are mobilizing the funds by issuing the priority sector lending certificate to other banks. Each certificate 1 crore, 2 crores like that. The other banks willing to invest. As a result, they are helping indirectly to our farmers. So in that case, the other banks buying these particular certificates. Certificates are called here as goods. GST attract 12%. Who liable to pay GST? Recipient liable to pay GST. Here, finally, amendment came here, sir, from 8th October 2024, applicable for our September 2025 exam. This is the amendment 8th October 2024. What is this amendment? It means for 10th October 2024 onwards effective. What is this particular amendment? Supplier of metal scrap. Supplier of metal scrap is unregistered person. Recipient of that metal scrap, namely buyer, a registered person. Then from 10th October 2024, it falls under RCM. Being a registered person, the recipient liable to pay GST. Is clear? Here one doubt I will bring to notice. Sir, I am an unregistered person, supplied gold scrap to a registered person. Whether attack the RCM or not? No. Gold scrap entirely different from metal scrap. I am talking about metal scrap. Even not plastic scrap, not fiber scrap. Metal scrap. Is clear as? One doubt has been asked last time when I took the batch for CF final. Before your batch, the student asked, sir, I am an unregistered person selling the metal scrap to a registered person who is in other state, interstate outward supply. Then RCM applies, sir, they ask me. First and foremost, for kind consideration, if you supplied interstate taxable goods as per section 24 clause 1, for you being a supplier, registration is mandatory irrespective of your turnover. Therefore, if the supplier become a registered person, question of RCM does not arise. Get my points? That's all. On count, on fingertip, you can be count right from the what we can cash units not peeled, not shield to metal scrap. On fingertips you can speak. These are the goods notified under the reverse charge mechanism. One is cash units not peeled, not shield. Thereafter pendu leaves, thereafter tobacco leaves, thereafter raw cotton, thereafter lottery ticket, silk and used goods except Indian Railways or Indian Postal Department. Thereafter PAT is settled lending certificate. Finally, metal scrap. Is clear as further. But one thing is very clear, be careful, my dear. Under RCM, you are going to pay the tax. The tax you have to pay only through electronic cash ledger. You cannot touch input tax kit while paying the GST and RCM. Now coming to the reverse charge mechanism for supply of service, a little bit lengthy list. No problem. Easy. Service sector is bigger. Now coming to the service sector, RCM. Goods Transport Agency. Transportation of goods by road. Goods Transport Agency means goods are transported by road. There, who is supplier means, who is a GTA means the person who issue consignment note is a supplier. Then who is the recipient, sir? The person who paying the freight, who paid the consideration recipient as per section 2, subsection 93. Who paying the consideration is the recipient. In case of there is a consideration, if there is no consideration in all cases, who receive the goods or services is the recipient. Is it clear? So in this process, GTA, if not opted, forward charge. For them, a forward charge is there. Why? If it is under RCM, opportunity to claim ITC is missing by the GTA. That opportunity is granted by giving an option GTA, if you like, opt forward charge. then no reverse charge. Under the forward charge, you pay 5% without ITC, or you pay 12% with the ITC, left to you at your tax planning. Is it clear? Sir, GTA not opted to pay GST and forward charge. GTA is an uninsured person, sir, otherwise. GTA is an uninsured person, sir. Very, very good. In that case, reverse charge by default. Where the recipient is a specified person. Who is he? Maybe a registered person, maybe a corporate company, maybe a factory, maybe a society, maybe a registered firm, a partnership firm. Get my point, sir? If that is the case, the recipient liable to pay tax on the freight, which is 5%. That 5% GST what paid by recipient through electronic gas charger, can he ask for ITC? Yes, if it is used in the course or furtherance of taxable output supply, eligible to claim ITC. Is clear as?
Yes.
Further, coming to advocate services, arbitral tribunal services, form of advocate services, or otherwise the senior advocate services. If they are the provider of services to business entity, the business entity being recipient whose aggregate turnover in the previous year exceeded threshold limit for registration, in that case, in the current year, it apply RCM, namely business entity liable to pay GST. Otherwise, it is exempt only. You get my point, sir? There was a question in the examination, sir, in this regard. I will ask you just to refer to me. Rana and Company, partnership firm. Previous year turnover is 2 lakhs. In the current year, they received advocate services for 2 lakhs. Are they liable to pay GST and RCM? In the current year, they got registered. Rana and Company, a partnership firm. Previous year turnover how much? 2 lakhs. In the current year, they got registered, and in the current year, as a registered person, Rana and Company business entity received the services from advocate for 2 lakhs. Is it under RCM or not in the current year? No. Always you refer, my dear, previous year aggregate turnover. That criteria vechukonu. That is the criteria you should hold. Previous turnover how much yesterday? 2 lakhs, 2 lakhs. Not exceeded even 10 lakhs also. MMD, Manipur, Mizoram, Nagaland, 10 lakhs for registration. For other states, 20 lakhs. For a trader, 40 lakhs. So, in the given case, 2 lakhs only in the previous turnover. In the current year, the business entity may be registered, because current year they have crossed the limit of 20 lakhs. But in that current year, if advocate provide these services for 2 lakhs to that business entity, are the business entity liable to pay GST under RCM? Refer the previous year. How much turnover? 2 lakhs. Not even exceed 10 lakhs also. As a result, in the current year, it is exempt supply. This question has been appealed as CF final. CF final questions are very interesting one and depth one, my dear sir. Unless you be thorough with the subject, you can't answer just like that fluke manner. Now, please come back. Sponsorship services. Now, here there is an amendment taken place. Sponsorship services. In your material also, the amendment is there. Sponsorship services. Charge GST from the charge of GST from 16 January 2025. Services supplied by way of sponsorship to any body, corporate or partnership firm. What amendment here taken place means from 16th January 2025, supplier of service earlier prior to 16 January 2025, any person. Now that any person has been replaced as any person other than body corporate. Supplier of sponsorship service other than the body corporate, recipient of service must be a body corporate or a partnership firm who are registered in the taxable territory. Then only it is under RCM. Sponsorship services from 16 January 2025 onwards, supplier of service must be any person other than body corporate. Recipient of service must be body corporate or partnership firm or LLP. LLP நான் சொல்லலாம், but LLP is not existed na. LLP Act is CMA. Act is there, but the institute not permitted na. The CA institute, CMA institute, multidisciplinary practice, my dear. A person of a CA join with the company secretary, cost accountant can join together, have a partnership firm, but the sole proprietary certification should be done by the respective partners. This is not effective, seems to be not effective. I have been verified couple of 2 days before only. It is not brought, it is not in force LLP. Therefore, partnership firm, I will say. Firm includes LLP actually. Now please come back. Here, in the given case, if you refer here, services supplier should be any person other than body corporate supplied to a recipient being a body corporate or a partnership firm located in tax free, then RCM apply from 16th January 2025. Prior to that, any person was there, a body corporate also may be provided to a body corporate. In that case, RCM. You get my point, sir? If now a body corporate provide the services to a body corporate, what a sponsorship services, FCM or CMA? FCM. Any condition not satisfied, FCM only by default. Even why, sir? A person providing sponsorship services other than body corporate to a particular sole proprietor. Forward charge, reverse charge, forward charge. RCM varade. FCM, excellent, perfect. Forward charge mechanism will come into picture. Further, government or local authority, which includes now the court, the tribunal, the state legislative assembly or parliament, if they provide the services to a business entity whose aggregate turnover in the previous year exceeded threshold limit for registration, then RCM comes into picture. A classical example I will tell you right now to you. My name is Airtel. I got a permission from the Registrar of Madras High Court. They permitted me to install my cell tower in their premises, where I am paying monthly rent 2 lakh rupees to High Court. Who's supplier of service? High Court. What type of service? Renting of human property. Who to whom? To a body corporate, Airtel. Airtel company please needless to say more than threshold limit for registration. Then in that case, who will have to pay GST? Airtel company. Same cell tower, if I have installed in the premises of Indian Railways, in the premises of Postal Department, by taking the permission from them and paying the rent, FCM. For Indian Railways, it is not so. For Postal Department, it is not so. For other than that, yes, RCM. ஐயா பாருங்க, இப்போ நான் சொல்கிறேன் உங்கள் மெட்டீரியல். நான் only I'm telling you, brother. Transfer of development right. FSI, floor space index, long term lease is in relation to real estate sector. Therefore, CA final excluded. Is it excluded from CA final September 25 exam. Get my point? Coolly excluded. So not required to refer. Director of a company provide these services to the company acting as a director, and the TDS under the Income Tax Act not deducting under section 192, then the GST apply, RCM takes place. You get my point? Section 192 of Income Tax Act talks about what? Salary. TDS Raja, Marakakuda, you are the masters of income tax. Yes or no? So, if a director is a whole-time director earning the salary from the company, taxable under the head salary, TDS 1 and 2 will apply, GST won't come. Sir, whole-time director attend a board meeting, sir, earning of a sitting fees. Sitting fee is not taxable under head salary, income from other sources. If so, not in the course of employment. It is as a director. Supplier is a director, recipient is a corporate company. Company liable to pay GST under the RCM. Is it clear, my dear friends? Further more points I am referring here for a kind consideration. Here, clarification of the CBS. This I will present. Look to me, not required to read. Reading is boring. Listening is interesting. One person, Miss Rani, is a nominee director in Raja Limited. Who is appointed as a nominee director? Rani Limited. Rani Limited appointed Rani as a nominee director in Raja Limited. Is clear? Rani owned this property. This property owned Rani. She is a nominee director. Given that property on rental basis to Raja Limited. Get my point, sir? Now, Raja Limited paying monthly rent 5 lakh rupees to Miss Rani. She is a nominee director in the Raja Limited. Who is the supplier? Rani. Who is the recipient? Raja Limited. Is it an RCM or not? Not an RCM, my dear. Why? Rani not provide the services as a director of the company, as a owner of the property. Any person can be who's owning the property is owner. Get my point? Rani provide the services as a director in that company, as a director in her director capacity, then RCM comes into play. Get my point, sir? If any other service rendered not in the course of directorship, which is not a RCM, is a clarification of the CBS. Is clear, Amma? Further, insurance companies where insurance agent is a provider of service to insurance company for getting the commission. Who liable to pay GST? The recipient, insurance company liable to pay GST under RCM. Further, recovery agent services. Who is recovery agent? A professional person whose name is empaneled with the Reserve Bank of India. Reserve Bank of India is guiding the bankers. If you have NPS, take the help of these professionals. They will expedite realization of your NPS, non-performing assets. For which recovery agent is supplier of service, recipient of service, banking company, NBFCs. Who liable to pay GST? Banking company and NBFC liable to pay GST. Is clear, my dear? Any difficulty? Coming to music composer, photographer, artist and like. If they provide these services by providing the copyright and temporary basis to producer, to a music director and so on under RCM, the company, corporate company liable to be GST. For example, A.R. Rahman composed Hello Tune and given to Sony company New Delhi on temporary basis that copyrights to use for 1 year. Monthly paying 1 lakh rupee. In a year, 12 lakh rupees. Is it forward charge, reverse charge? Reverse charge. There you are. Is clear, sir? Coming to author of a particular book. I am Mr. Rafi. Mohammed Rafi is an author for Indirect Tax Laws book. My book is published by the Bharat Law Publication. Almost 30th edition is in the market today. Upcoming is 31st edition. Almost 15, more than 15 years. The book is rotating across the India. Including department people are using that for their further practice purpose. Meaning what? For their reference purpose. Rafi, being an author, given the copyright to publish and sell to Bharatla publications, getting the royalty every year. Generally, it is by default RCM. But Rafi feel unhappy. Why? My supply, RCM apply, not taxable in my hands. My input tax will become a cost for me. Rafi recently opened a big office where he incurred so much of infrastructure with the AC and all. The input tax is, sorry to say. Sorry. Rafi incurred so much of infrastructure expenditure where almost 100 lakhs has been spent. GST 18%, 18 lakhs credit is there. If my supply, the recipient liable to pay tax, for me, my GST input tax kit form part of the cost. I want to avail ITC. I myself asking department, could you please permit me to pay the GST and forward charge? Reason behind what? To avail the ITC, nothing else. Not a love and affection towards the GST department to pay the tax. Anybody love have to pay the GST? There are people, I'm not denying, for the nation, they love to pay the tax. But how much tax should pay? Huge amount of tax we cannot pay and go without empty hands. Na? So, Mr. Rafi want to avail the ITC. Then request department, permit to us to pay under forward charge. Department accept, government accepted, GST council said, recommended. If the author of a book willing to pay the GST as his own, means willing to pay GST, give a declaration to department and intimate to the recipient, supplier, I am going to pay the GST, sufficient. With that, you raise the tax invoice, you can claim ITC while paying the GST. Is clear as? Coming to import of services. When a service called import of service, as per section 2, subsection 11 of IGST, location of supplier outside India, location of recipient in India, place of supply should be in India. In that case, import of services. Such import of services, majority cases are exempted. For other majority of cases, taxable. If taxable, in one case, forward charge. What is that forward charge means? Services in the nature of OIDAR, speak out OIDR, online information database access or retrieval services, meaning what? The service available readily in the cloud to download. For example, my classes of CF final now recording. After completion of all classes, after 11th of August, the classes are available in the cloud. To access, you please pay 1000 rupees. Is called OIDR service. Such a service provided outside India and the recipient is in India, such a recipient is a non-taxable online recipient. Speak out a non-taxable online recipient. A transaction B2C. Non-taxable online recipient means an unregistered person. Simple to say. An unregistered person. In India, import these services of OIDR nature who provide these services from outside India, then it is a B2C transaction of OIDR nature, absolutely taxable if that import of services for consideration, not free. Free, no one liable to pay GST. The best classical example I am telling you here is the OneDrive Cloud. OneDrive Cloud subscription 365 days is OIDR service. MS Office, Microsoft from USA providing these services, antivirus software, any app, particular app services. So such a service provider is outside India, recipient is in India and import this service for consideration. The recipient is uninsured person who is a non-taxable online recipient, is a forward charge. Is a forward charge, no exemption. You are downloading various music albums from Google, yes or no, or from YouTube and all, where the payment is required. If the supplier outside India is a recipient in India, who is the uninsured person? Non-taxable online recipient is no exemption. Liable to pay GST under forward charge, namely FCM, void liable to pay tax. Same supply of OIDR nature received by Indian recipient is a registered person. A B2B transaction. Such import of service liable to pay GST by recipient under RCM, reverse charge mechanism. Any service other than OIDR nature, imported into India by a person who is non-taxable online recipient, even for consideration, it is exempted supply. I use the word what? Exempted supply. The story what I referred so far, I am presenting, just look and understand in one particular slide. I am not showing the chart, I am showing a diagrammatic presentation. Chart is different, diagram is different. It's a diagrammatic presentation. Sir, import of, first you follow with me with the process. Import of services. By whom? Government, local authority, or individual, like that. They are called as non-taxable online recipient. If yes, for consideration, yes. OIDR, yes. FCM, no exemption. If it is not OIDR, then no GST. What is this example, sir? I will tell you example. Now you wanted to go to France. You are a qualified CA, you got an opportunity to go to France, but one requirement, you should know a little bit French language you require. So in India you're sitting and approach one tutor from France who's coming and taking every day 1 hour morning and evening French language, you going on acquired. Now you are speaking French nicely, for which you pay to the gentleman is $10,000. Now who supplier? The tutor, partner from outside India. You are in India, you are a registered person? No, you are a niche person. You want to go to France. So online, the non-taxable online recipient for consideration is OIDR? No. Therefore, it is exempted. If OIDR B2B, then for consideration, then RCM, OIDR service, OIDR. Look here, look amma. If it is not, means B2B, not a non-taxable investment. Other than that, in that case, for consideration, yes. For consideration, if yes, here you see, for consideration, yes. For consideration, exempt supplier, it is no. Then if no means RCM. If it is exempt supplier, no GST. If no consideration, then are they related parties? If yes, RCM. If no, no GST. Get my point, sir? That's all. Everything is covered. You want further more simplification of this? I will show you one slide. In the material, it is there under the place of supply chapter. Now look here. You will appreciate my presentation. Import of services, what? OIDR. B2C OIDR. B2C OIDR is taxable, FCM. B2C other OIDR, exempted. B2B OIDR, RCM. B2B other OIDR, RCM. That's all. This is what in a lollipop manner I explained to you in that given slide. Import of services. Now here I would like to bring to your notice one exempted supply of service relevant to note. Sea freight. If the goods are imported by importer in India from outside India, that the goods are coming in a vessel to Indian port, the sea freight earlier, before the amendment, before the judgment of the Supreme Court of India in the case of Mohit Minerals case, yes, Mohit Minerals. See, in the case of Mohit Mineral case, what happened when I import the goods as importer into India? Is import of goods value of custom duty I am paying on CF value, cost, insurance, freight. As a import of goods on the total I pay the custom duty. Department of GST என்ன சொல்றது, what they are doing is, hey Mr. Importer, you import the service of sea freight. On the sea freight, you pay the GST, IGST 5%. Sir, the sea freight form part of my CF value. Sir, I paid the custom duty. Sir, again asking me to pay the GST on the sea freight unfair, sir. Department not accepted. The matter went to Gujarat High Court. Gujarat High Court said, Enna department, what you doing? Double taxation. You came to India with the GST, one nation, one tax, correct? Then you are taxing double taxation. How it is possible? So very bad. Department got angry. The law is there. Why should we leave it? The matter went to Supreme Court of India. Supreme Court of India said, department, please try to understand. When there is one nation, one tax, sea freight is a form part of CF value of imported goods on the total importer paid import duty. Not sufficient to you? Again, IGST as import tax is liable to pay? Unfair. If such a provision there in the law, bad, struck down. Then by giving the due respect to the Supreme Court of India judgment of the same case of Mohit Mineral case, the law got amended saying that sea freight, where import of goods are imported CF basis and the sea freight is a form part of the CF value to pay the custom duty, such a sea freight not subject to IGST, exempted from the payment of IGST. Get my points? Business facilitator services. Let me complete this 4 or 5 points. Will be, because exactly 4 o'clock I cannot able to stop the vehicle. Even if I brake here, it go and stop little bit ahead, correct? So you have to cooperate. At final level, you should not look the time for subject. Learn the subject is important. So business, I will complete reverse charge, I will provide the half today. Okay. Business facilitator and business correspondent. First to understand, business facilitators are individuals, business correspondents corporate companies, both of them facilitating to banking companies to generate more and more customers. Such services offered by them to banking company or NBFCs which are located in rural area, absolutely exempted. No sir, they provide these services being a business correspondent or business facilitator to a banking company branch which is located urban area, then taxable. Their services are RCM. Who is supplier? Business facilitator. Who is supplier? Business correspondent. Who is recipient? Banking company, NBFC. Who liable to pay GST? Banking company, NBFC liable to pay GST. If business correspondent being a corporate company appointed one particular agent, then the agent providing services to business correspondent also under RCM. Then business correspondent liable to pay GST, provided if that service provided to a banking company located urban area. If business corresponding providing service to a banking company in rural area, exempted. He appointed a agent. Agent providing to business correspondent also exempt. Security services. Security services. Here important to note. Here if you refer, one of the point here is there. Fine. Now please come back. Amendment is there for other one, not to security services. Already there amendment. Security service different from manpower supply service. Can you agree with me? Manpower supply officers different from security services. In the SMA, manpower na enna supply in the contract labor. Security na protecting the assets of the client, safeguarding the assets. Security services offered by service provider any person other than body corporate to a registered person are same. Who liable to be GST? Registered person. But the registered person should not be registered and paying the tax under composition scheme. The registered person should not be a registered person being a government or local authority only to deduct the TDS under section 51 of the CGST Act to pay. Meaning, a person providing security services, extend company partnership firm other than body corporate, provide the services to X Private Limited. X Private Limited is a registered person but pay the GST and composition scheme. Supplier by whom the partnership firm, extend company other than the body corporate. Recipient by whom body corporate but registered to pay GST and composition scheme. RCM, FCM, FCM, excellent. Sir, supplier is a body corporate, X Private Limited, provide the security services to TCS company, which is registered person other than the company scheme. FCM, RCM, FCM, supplier are body other than the body corporate. In my example, what I given? Body corporate. We understand body corporate, nothing but the corporate company registered under the Companies Act 2013 as a PVT or LTD. Get my point, sir? Supplier should be other than the body corporate. Recipient should be a registered person. Then the registered person should not be a composition taxpayer, should not be a person paying TDS under section 51. For that purpose only they got registered. Otherwise, they are not required to get registered. In that cases, no RC. Only FC. Is clear as renting of motor vehicle. Where renting of motor vehicle is considered, my dear sir, the rental charges includes cost of the fuel. Supplier should be any person other than the body corporate. Registered person should be a body corporate. The renting of motor vehicle, the vehicle meant for transportation of passenger vehicle. Renting out, rental charges includes cost of fuel. Supplier other than the body corporate. Recipient, body corporate. Then only RC. Otherwise FCM. Is clear? Services of lending of securities. One is to be understand securities lending and borrowing concept. I will tell you with the help of diagrammatic presentation in this regard. Securities lending and borrowing is a taxable service. Securities buying and selling, not a supply. But securities borrowing and lending is a separate service. When you refer, my dear sir, in the given case, securities, lending of securities, where I will tell you one example. A high net worth company, let us say LIC, life insurance corporation, huge amount of investment they have with them. Capital is there, asset is there. Couple of months before, they invested crores of rupees for buying Adani group of company shares. It happened. Fact. They have paid huge premium and purchased from the open market securities. Thousands of crores invested. After that, Hindenburg report came against Adani group of companies. Then the company shares fallen down like anything, even below face value also. Those shares purchased by LIC, huge worth of investment, market value is huge, premium heavy amount. Now tell me, are they going to sell their shares? No, we loss. If they are retained, are they going to get any dividend? No, last penny, no dividend. So in that case, what they will do with that huge amount of investment in that capital? They are depositing that shares with intermediary. Who is intermediary in India means there are two companies only called authorized intermediaries to lend or borrow the securities purpose. One is called Bank of India Shareholding Limited, is an intermediary. NSE, National Stock Exchange Clearing Limited, as intermediary. With them, the LIC deposits the shares. LIC deposits the shares. Is clear? Now shares are available with whom? NSE. A company, HDFC, which is going to be trade with the securities in the secondary market, advanced concept of securities, derivatives, agree to sell at a price on so and so date. On the date, actual sales will not only take place, but the differential price gaining the margin. Put option, call option. You are very famous. AFMA, Advanced Financial Management. There, put option, call option, agree to sell but not actual sell. The differential price margin is gaining for quite some period, trading and coming out from the share market. In a simple terminology, intermediate level, we used to learn this as a arbitrage. For that, a company called as here HDFC approach NSE, anybody their security deposit with you, can you lend to me for 30 days, for 60 days? I will trade that in the market, I will return back to you shares, only for lending purpose. Then NSE said, yes, one company called LIC, they deposit their share with us, we are ready to lend for 60 days. Exactly after 60 days, you have written back the shares. HDFC promised, yes. Then intermediary said, for the 60 days you are using the shares for trading, you have to pay rental charges to LIC. Then HDFC said, yes, I will pay it. Then that particular security is borrowed by HDFC and traded quite for some time. They strike some margin and returning back securities through intermediary. That time they have to pay amount to LIC. So they are paying the amount to LIC. 2 lakh rupees. Who supplier? LIC. Who is recipient? HDFC. Security borrower. Who liable to pay GST? Recipient. Security borrower for that matter. Recipient liable to pay GST under RC. Of course, whatever may be the securities handling charges charged by the intermediary is the FCM. National Stock Exchange Clearing Limited charging charges. That is a FCM. Get my points? This is what securities lending and borrowing services RCM. Now, furthermore, we have overseeing committee appointed by the Reserve Bank of India to monitor the borrowings status of the scheduled bank. Nowadays, scheduled bank is looted by the people like Vijay Mallya and all. So, While granting the loan itself, if the loan amount is more than 5 crores, proper screening, proper verification, and proper guidelines, for which Reserve Bank of India appointed overseeing committee to monitor the lending process of the scheduled bank and report from time to time, for which Reserve Bank of India making the payment to overseeing committee. So overseeing committee is a financial experts group. They are providing services to Reserve Bank of India. Supplier is a overseeing committee, recipient is a Reserve Bank of India. Reserve Bank of India liable to pay GST under RCM, not by overseeing committee. Here, renting of a residential property for residential dwelling to registered person under RCM is an amendment from 18th July 2022 onwards. I own a residential property, sir, given to you people. What for? You people residing along with your family. I given for residential purposes. You are not doing any commercial activity. In spite of that, if you being a recipient, registered person is under RCM. For example, I am a owner of double bedroom flat in T Nagar. You are a qualified CA, you are a CFO of TCS company. TCS company providing to you residence, house properties providing to you in T Nagar. You approach me, sir, we want your house for residential purpose, sir, but the rent will be paid by TCS company, sir. For me, no problem. Rent is 1 lakh rupees, I say. You said, oh, very small amount, sir, we will pay. So, you are residing as a CFO of TCS with your family. But for the owner of the landlord, who is the recipient, not the person living here, TCS is the recipient. TCS is paying the rent to me, monthly 1 lakh rupee. TCS needless to say registered person. FCM or RCM? RCM. On the other hand, you being a CFO, residing in my premises as the residential dwelling purpose, and you are paying from a personal account rent to me. You are a registered person, unregistered person, exempted. Get my point? This RCM, if comes into picture, irrespective of the supplier status, supplier may be registered, supplier may be unregistered immaterial. You get my point, sir? So 20 points we covered. At this point of time, I'm concluding the session. Continuation from here, next class by tomorrow, sharply at 10 a.m. Thank you, my dear friends. See you next class. Thank you. Thank you to Enda. Any doubt? No doubt? Very good.